And this is a way that they can nurture more lives and maximize their impact for the long term. So we at YWCA Metropolitan Chicago are just super excited and, dare I say, blessed to be able to partner with amazing cutting edge organizations like Black Femme. And I'm going to be quiet and turn it over to you, Emil, that dude who I said is the COO. So thank you.
Thank you. Thank you again for everything. And as you mentioned, happy first day of Black History Month, which, is something we celebrate truly every day of the year. So I don't want to waste too much time. We're talking about moving from fear to financial security. And so this is going to be on activist investing. And with that, we're talking about investing, how it can be from an activist landscape, but it can also just be socially just an activity. And so we're going to explore investing in stocks, opening a little more about brokerage accounts. But again, please be clear, we are not your financial advisors. We recommend that when you get to this point and you're ready to make those financial commitments, you talk to, dedicated trained professionals in that space that you can have that fiduciary conversation with. So I just want to put that disclosure out there. The YWCA, Black Femme, as well as Impact Shares, we're here to provide from an educational and informative landscape, not from a financial investing space. So let's go ahead and get started. So we're going to dive deeper into investing, right? And how this can, like I say, you can do it from an activist landscape, or you can just do it as a social activity. And we're looking through the lens of aligning the social issues that you care about. And this is all coming from our founder, Chloe McKenzie's best-selling book called The Activist Investor, which every participant will actually get a free digital copy of after this workshop so that you can dive deeper. It's a great book, a very easy read, very informative. So as you all know how we do it, we like to have polls. So we'll start off with just taking a poll as to how we're feeling, just how you're feeling today, but also how you're feeling based off of what this topic is, as well as how you've gained the information from the last couple of weeks. So if you want, you can text Black Femme to 22333 or go to pollev.com/Black Femme. Let me check because there's some people who definitely use the chat. So I got one person excited. Anybody else have any feelings on today? Tired, that's understandable. Hungry, intrigued, excited. Good. Hopeful and excited. Okay. Interested to learn more. Overstimulated. Okay. Overwhelmed. All of those are definitely very understandable and real feelings. But I see the majority sentiment is excited. So we appreciate that, and we're gonna move forward. So let's start with a recap from our last session. Remember, we spoke about our rights as shareholders and knowing who owns which brands and how it helps us to realize what power we have to make change. And so first is going over those rights again, right? Like as a shareholder, you have a right to ownership, which is when you actually purchase the stock or you're gifted the stock. The next is, depending on how the shares and how the company is set up, you may have a right to voting. There are shareholder meetings that take place where you can, based off of how many shares you have, or if it's publicly traded, you have a right to vote on what's going on with the company. Then there's dividends. Dividends are things that are paid out to you if the, as the company is doing well, and that could be in the form of actual cash payments or more stock to you. And then you have the ability to sell your shares. So at any point, if you feel like you're losing too much money, you just want to get out, you can sell. If you are like, I've made what I'm going to make, I don't think that it's going to go higher, let me take my profit and leave, you can sell. If you're just tired of it, you can sell, right? Like at any point, you have the ability to sell your shares. And then you have the right to request information on what is going on with the company. If you feel like they are not doing their due diligence, that can also lead to your right to sue as well, to ensure that the company and the board and the managers are doing what's in the best interest for the shareholders. So let's get started again, right? Like for investing, we need to have a brokerage account. And a brokerage account can come in many forms. It can come in your new modern day form, which you can use on your phone, whether that's via Robinhood or a Coinbase or a Voyager or whatever the app may be, or it can be in the more traditional, right? Like going through your bank or through like a TD Ameritrade or an E-Trade or something of that nature. And that's where you will look up the stocks by its ticker, and that's where you will also make your purchases of the stocks. So let's talk about how you actually go about picking your stocks, right? Like there's metrics to it. Sometimes it can be an emotional decision, right? Like you see that a lot of people are talking about it and you're like, well, I'm gonna go ahead and buy it. Or you're someone that's calculated and want to do your due diligence and figure out what is the best stock for me given the disposable income that I have. So what we want to talk about is how to pick it, right? And so this is the only time that social media stalking is a good thing, right? Or stalking in any form. And this is just a word, so be clear on that. But so social media stalking is a good thing because it's trying to find a balance, finding people on dating apps and not being catfished in a serious endeavor, right? And so in a way, it's like we try before we buy. So for this particular instance, we're talking about how we're going to look at stocks. And so take, for example, this profile of Rihanna. Again, congratulations to her and A$AP Rocky on their upcoming baby. But as a way to stalk our potential date, we're doing our own form of fundamental and technical analysis, right? And so the fundamental is actually looking at pictures, seeing, does this person, when they have, on their profile, do their pictures from their dating app match the pictures on their social media? How many pictures do they actually have, right? And then the technical analysis is seeing how many likes and comments the average person gets, right? So like this particular person has 747 followers. They're following 747 people. They post 383 posts. And so from your technical analysis to see if this person is probably like a bot or a catfish or a scam, if they post one picture and it only has 2 or 3 likes out of 747, right? Like that doesn't even register as a percentage. And so 9 times out of 10, if a lot of their pictures are like that, you're not going to believe that that person is a real person, because with such a low quote unquote followers, they should have a higher percentage of engagement, whether that's via likes, whether that's comments, or whatever the case may be, based off of the pictures that they post. And so we use that in the sense of how we're going to actually look at stocks, right? So metrics are very important when we're talking about measuring the success and how compatible a mate is. But commonly used metrics for investing can help us help us feel more confident in our decisions to pick stocks. Metrics matter, but only when racism and misogyny aren't behind them, right? And so let's take, for example, a stock that we might be looking at, right? A lot of people enjoy Target. And so if you aren't sure where to start, think about companies where you spend a lot of your time and resources, right? Like, are you a loyal customer to Target? Okay. If, for example, you spend $100 every time you go to Target, that might be a potential investment because you're paying yourself to some extent, right? Like, now, again, I'm not telling you to go buy stock in Target. I'm just saying, look at the things that you are actually spending money on a consistent basis and see, are those things that actually align with me as a person, and how can I potentially benefit in multiple ways from that? And in order to do that, there's 4 key factors that we look at, right? And so the first is the market capitalization, and we'll get definitions for these in a second. The next is beta, and then the next after that is the price to earnings ratio, and then you want to look at the return on equity. And so for the market cap tells us the current value of a company as reflected by stock price. And so we want to think of it as the company's size. So you want to figure out a company's market cap by multiplying the number of shares outstanding, which is all the shares currently owned by shareholders, company officials, and investors like us. And then you want to multiply that by the current stock price. And a company's size has an associated risk, right? And so a small cap is 300 million to 2 billion, and a large cap is 10 billion and above, right? And so the places we tend to really put money in or consume really is those with mid caps to large caps. Now, if you are able to get in on something that has a small cap with a bright future or potential upside, then you're doing very well because you probably were able to buy the stock at a very reasonable price before it picked up traction. And that's how a lot of people have been able to make their money. And typically those happen when people are, investing and they're raising capital. They have, their angel investors, or they have friends and family rounds. And that's where you buy up on that small cap. So again, a large cap is companies that are less risky, right? Like they are more established. They have, preserved their market share. And so the portion of the market that they own is their market share. They've been around for quite some time. Mid-cap companies are still established, but the industries tend to experience rapid growth, or the company is in a big growth phase. And so they're riskier than a larger cap, but they can be attractive to investors, especially those who have the money to lend and risk out there. Now, the smaller, of course, like we said, are the riskier, right? Like they are companies that are newer, that are coming on the market. So for example, I don't know how many people have been playing the game. I think it's Wordly. That would have been considered a small cap, a very risky investment, but it paid off for anybody who did invest, because just the other day, the New York Times announced that they were buying them, and they bought them at a 7-figure rate. And so it wouldn't have even registered on this small cap because we're talking about 300 million. And so those are things that you're looking at, right? Like, what are companies that may get bought in that small cap race or a range that might be worth the risk? But if you're looking for something that is just more sustainable, that you can put in, it's a little safer. Every quarter you make a couple dollars. You're looking between that mid cap to large cap as far as how you want to invest. So the next is the price to earnings ratio. And so what that is, when you're looking at between two companies, right, a large cap and a mid cap, it can sometimes seem like comparing apples to oranges, but this is where the price to earnings ratio comes in. And so it's like, how much do I need to invest in order to receive $1 of that company's earnings in return? And so what you're looking at is the current stock price versus the earning price per share. And that's how you get the price to earnings ratio. So we're comparing a stock values to one indicator of the company's profitability in order to tell us what the market is willing to pay. And so a lot of our easy way sometimes to be able to find that is you can just Google that, right? Like For those of you who actually use, again, I am not advertising Robinhood. It's just an easy app, so be clear. But if you use Robinhood, right, like you can go to, let's look at Apple. They actually have on their page what their market cap is, what their price to earnings ratio is, and the average volume, the open, the high, the low, the 52-week low, all of that is there under the stats. And so when you're looking at, how you want to invest, you want to get as much information as possible, so that you can make the best decision. Sorry, that the best decision that you can on how to invest your money. The next, so if we're looking at, here's an example. If we're looking at the price to earnings ratio is $62.21, then we should be willing to, or should expect to invest approximately $61.21 in order to receive $1 of the company's underlying earnings. And so you may be asking yourself, is that high? To which the real answer is we don't know, right? Like that depends on how much you're trying to make. That depends on how much you want to invest, and that depends on like the growth of that company. A stock that's $62 today could easily be $300 in a month, right? Like there's no way to really gauge that and to really decide that without doing a lot of market research. And then you have to, as the investor, make that decision, and that decision can be made with your financial advisor, right? So let's look at this. If Verizon's price to earnings ratio as of December 31st, 2018 was 13, and T-Mobile's price to earnings ratio as of the same date was $23.24. Using the definition to receive $1 of Verizon's earnings, how much would you need to invest? And how about the same for T-Mobile? So we're going to go to our poll. So how much would you need to invest in order to earn $1 for Verizon if their P to E was 13? Yes. Okay. And then the next is for T-Mobile, for their price to earning rate, if their price to earning ratio was $23.24, using the same definition, how much would you need to invest? $24.24. I assume that was, yes, a quick typo, but okay. And so, yes, you would need to invest $13 for Verizon, $23 for T-Mobile. Now, if you had to pick, which would you choose? And we can put that in the chat. And then why, right? Like there's no right or wrong answer, and I'll publicly share my answer. But if you had to choose right now between investing in T-Mobile or Verizon, given that Verizon's was $13, T-Mobile's was $23.24, which would you choose to invest in? And you can just type it in the chat. I see Verizon, T-Mobile, because that's my carrier. That's fair. T-Mobile, Verizon. I'm seeing a lot of most people choosing T-Mobile. Okay. T-Mobile because of their expansion. Interesting. So I personally, this is just me, I would choose Verizon I would choose Verizon because it's almost half the share of T-Mobile, and also in current day understanding that Verizon is a major carrier. They also were one of the first to do the 5G. I would anticipate that their stock is going to rise a little faster, keeping in mind that T-Mobile and Sprint had to merge in order to compete with AT&T and Verizon. But that's just my technical analysis. There's no right or wrong answer. But that's why I would invest in Verizon and why I would have chosen Verizon. So the next is beta, right? Beta is a stock's is how they measure price volatility. It's a price function. And so it's relative to the overall stock market. In other words, beta is what allows us to see how a price is going to change in comparison to the S&P 500 and other prices. And so a stock's beta will tell us which direction the price will likely move and by how much. So if a stock has a beta of 1, then on average, that stock will move similar to the S&P 500. The positive number indicates that the stock price will go up. And of course, a negative will mean that it will go down. And it will move by as many points as the S&P 500. So if a stock price has a beta of 0.5, then that stock price will still move, but in the same direction, but it'll just move at half as much. And if a stock price has a beta of 1.5, then it's going to move, half as fast as if it would have a stock price of 1. So some stock prices actually have negative betas, like I said, so that will make it move in the opposite direction by and tells us by how much. So one limitation is a beta metric does not consider a stock's unsystematic risk, the risk that is specific to a stock's underlying company, right? And so we're not talking about internal things. We're talking about how the stock has moved and fared with other stocks in comparison to the market. We're not talking about internal things, right? So like a beta score and the CEO resigning, those two prices will not necessarily be intertwined. So the S&P went up by 4 points. What happened to the following stocks, holding all other market forces constant, right? And answer with what direction the stock moves and by how much. So if the stock was with a beta of 1, stock with a beta of negative 0.5, and stock with a beta of 2. And the price it's 4 points. That's the S&P 500 going up by 4 points. So if it went up by 4 points and you had a beta of 1, what will it do? Will it go up by 4, down by 4, or up by 1 point? I got up by 4, A. A. Okay. The next is, sorry. If it went down by 0.5, so will it go up by 2 points, down by 2 points, or down by 0.5 points? I see a couple C's, some B's. Got a B on the big screen. Okay. And then it went up by 4 points with a beta of 2. So is that up by 4, down by 8, are up by 8 points. Okay. So if it has a beta of 1 and it went up by 4 points, we are doing just basic math on this one, right? So you're going to take whatever the beta is, and then you're going to multiply it by however many points the S&P went up. And so for this one, it's 1 by 4, 0.5 by 4, which gives you 2, and then 2 by 4, which gives you 8. And so again, the beta is going to be directly connected to the S&P 500 and the points. And so that's going to how you'll impact your stock. And now the return on equity, right? And so there are metrics to help us determine if a company is being managed well from a financial perspective. And so the return on equity measures how well a company's leader uses shareholders' capital, how well a company's managers are using the company's asset to produce profits. Companies can usually report their ROE in their annual financial statements, but you can also calculate this, right? And so the return on the equity is the net income divided by the average shareholder's equity. And so net income means the earnings after all the expenses have been deducted from sales. And so for us, we're thinking about our own net income, right? And that's after all the bills have been paid. What do you have left over? Was your month profitable, right? Like, so if you have $600 in income and $400 in bills and everything is paid, you have a net income of $200. So the shareholders' equity is like the net worth of the company. And remember, we want the net worth to be positive. And so if a company's REO is 20%, you can translate that to mean that 20 cents of earnings are being created for each dollar you originally invested. Once again, you can't really make a judgment about whether that's to your liking. You have to really make this a personal decision as to how you're going to invest, what you're going to invest, and what type of return you're actually looking for, right? Like some companies or investors, they choose to compare it to long-term stock S&P, right? And so the average REO is about 14%. So some choose to say if anything is below 10%, they aren't happy. But again, that's a personal decision that you need to make. And I can't stress that enough. So Verizon's net income was approximately 16.11 billion. Shareholder equity was reported at 60.31 billion on the same day. So their return on equity is the 2671, because it's the 16.11 divided by the 60.31. So what does that mean? What does this mean, according to the REO definition, right? Like, are they profitable? Is this something that you think that is worth it? So Verizon produced 27 cents in profit for every dollar that was invested. But this doesn't mean much unless we compare it to a similar company, right? And so we would have to go back and look at T-Mobile or AT&T to see what was their profit, right? And so if Verizon came in at 27 cents and T-Mobile came in at 40 cents, right? Then those who decided that they wanted to invest in T-Mobile, that was a better decision because you're probably getting a larger return on your investment. And so, it's a case by case, but it's also, you have to compare it to similar markets. So you wouldn't want to compare Verizon stocks to General Motors or to Apple. They're not in the same space. So we want to learn more about this lingo, right? We want to dive a little deeper. And so next is talking about dividends, bid/ask spreads, and then rolling and moving averages. So dividends, right? Companies, like I said earlier, as a shareholder, you have a right to dividends. And companies sometimes they pay a portion of their profits to shareholders in the form of a dividend. How much you get really determines or is based off of how many shares you own, and then it's going to be decided by the board of directors ultimately if they're going to do it as a cash dividend or as a stock dividend. And some companies, they pay every quarter. Some companies wait till the end of the year. It's really up to them as to what makes the most sense. But also understand you're not guaranteed to have dividends. So if you're interested in guaranteed dividends, then you should look at preferred stocks. And so consider the dividend payout ratio, which how much money a company gives shareholders via dividends is compared to how much it is keeping to reinvest back into the company. And so when we're thinking about dividends and why, right? Like most times you've probably heard that a company is cash heavy, right? And so they have way too much cash on hand. And so they actually will then pay out dividends in the form of cash because it's more beneficial for them to put that and carry that on their books versus giving out more stocks, because sometimes they would then have to carry that cash either as a loss or figure out what to do with it. And although cash is king, when we're talking about trillions of dollars, it's not always the best thing to have, versus giving people more cash for them to buy more stock, which would typically be the situation for most people. They will just take that and reinvest. So we've talked about, sending you to Google for a lot or having you do your own research. Rolling and moving averages. These are places where you can find a lot of this stuff. So Investopedia is a good resource. Nerd Wallet is a good one. Motley Fool is one where it's actually, they have paid membership, but they also have free where you can learn more about stocks, learn more about a lot of these definitions. And they actually give picks on certain stocks. The more you spend with them, the higher and more they give you as far as how they inform you on investing. Outside of that, we suggest that you start watching news stories to discuss, or CNBC or whatever form of a business news channel that you're looking at. But whatever you find, we really want you to go deeper, right? Like on your own, and make sure that it is palatable and understandable. And in layman's terms, a lot of these things can be very highbrow. And so we don't want things to get caught up in the minutia and the terms, and then you don't actually have real life examples of what they mean. But technical analysts use rolling time periods to increase the number of observations and the relatability of the conclusions we make at a given data set. So moving averages helps us to identify a trend's direction and to determine and support the resistance levels, right? And so a rising moving average could indicate that a stock price is in an uptrend. And a resistance level is basically the floor before that stock really crashes and tanks, right? And so for people who invest in crypto, resistance level is something that is definitely very commonly used. So you'll see a lot of the meme stocks right now that they have gone up and they fluctuated and gone up and down, up and down, and up and down. And if they go beyond that resistance level, then there's going to need to be some type of outside circumstance in order to help raise it beyond that. And so you're looking at whether that's interest rates raising or a lot of people generating some type of demand for it. So once you go below your resistance level, it's kind of hard to really come back up with the stock. And so with the bid and the axe spray, right? And so what that is it's not like what you buy in a store, right? Like if you go online right now and you see something and the price is $9.99, then you're going to pay $9.99. Now there's tax and all of that other stuff, but the price is the price. With stocks, stock prices are set both by the buyer and the seller on the exchange. The buyer says how much a stock, how much they're willing to pay for the stock, excuse me, which is the bid price. The seller says how much they're willing to sell the stock for, which is the ask price. The role of the stock exchange to the broker is just to facilitate the deal between the buyers and the sellers by organizing the bid and ask price. And so you can see the bid price and the ask price for stocks online using Google or Yahoo Finance or any of your brokerage tools, right? And so you'll notice that the bid and the ask price are never the same. The ask price is going to always be higher. And if you're selling the stock, you'll receive the bid price. You aren't just paying the sticker fee, right? And so let's say a stock right now is $25, and that's what you see it going for. If you bought the stock at $12, when you go to sell it, you're not going to sell it at that $25. You're probably going to sell it at somewhere between 24 and some change, depending on what the actual exchange is. And so as we get into our final lesson, we want to have you take with you, we want to really keep up with the macroeconomic data that you'll need in order to be successful in your trading pursuits, okay? So our final words here is, I'm a sneakerhead to some extent. I don't go crazy with it, but I definitely have my pairs. And so there's a old adage of when you're thinking about sneakers, is a pair to rock and a pair to stock. And so because there's such a high retail value on shoes, if you're in a position to buy two pairs, you should definitely buy one pair that you will wear, not all the time, of course, because you don't want the creases, but from time to time, and then have one pair that you can resell at a much higher value, especially if they sell out of the shoes and then there's talking about a shortage, right? And so you want to look at that from the same perspective to some extent, but we rewrite it a little bit, right? Like a pair to rock, excuse me, a pair to stock and a pair of stocks, right? And so what that is, buying the shoes to keep for yourself, buying the shoes to put up, and then buying actual stocks in the company that you're probably spending a lot of money in, so that you're making money at the same time, right? Like looking at it, and that's where that activist investing aspect come in. How are you playing a role in the money that you're spending? And are these things that culturally you're really supporting? And so back in the 80s, sneakers were called thug shoes, right? And so we can thank the Black community for catalyzing both the change sentiment towards sneakers and the profitability of the market. So, but what's missing from that story and is sharing in the wealth that the Black community helped to generate for shareholders of those companies, and so much revenue from the sale of those shoes. So again, like the original proverbial saying was, has owning the culture, but not owning the wealth. And we deserve both. So we deserve to be a part of making that change and making things cool, making things profitable, as well as receiving profits. And so we can own stocks. We have the ability, after we've done our research and determine what makes sense and how we want to be a part of that. And so we just want to be able to give you all tools, resources to really be active, if you want to do it from a socially conscious standpoint, or if you just want to socially make it an activity, right? Like where you have the disposable income to invest. And so what's great about sharing the wealth is we also get the right to vote for the decision makers of these companies producing the shoes. And so if you are looking at how you can definitely be involved, look at companies where you have an opportunity when you're buying shares to actually vote, not just in companies where you don't get voting, right? And so a lot of that, again, is your due diligence. And if you read Chloe's book on activist investing, there's definitely tools and steps in there that'll help you along this process. So I know this was a lot. We're going to just take a little second and see how you're feeling. I see Patrick said that he almost signed up for Motley Fool. And he was asking if anyone else has signed up. So how are we feeling? You can come back on, Alexandra. A bit more knowledgeable. Ready? Okay. Overwhelmed. That's totally fine and normal. Nervous, inspired. That is perfectly fine to only want to invest in African Americans. Is definitely, that's where that research comes in, right? Like finding out those companies and who is who's on those boards. And that's the extra legwork that you have to do and do your due diligence if you want to be very specific in how you're investing. So thank you all again. Thank you, YWCA Impact Shares, for being our sponsor on today. Jill has posted in there, As You Sow is a great resource. So please scroll through, just go ahead and click the link so you have access to everything. And we're here to be a resource. We want to kind of whet your appetite or your palate rather, and get you intrigued, understanding that there's no way in 3 weeks we anticipate that you're going to be out there to go and invest in everything or buy everything or be the most financially savvy person. But you have to do your part to continue this effort, right? And utilize the resources that are there to you. And one of them, again, is the YWCA in Chicago, which has so many layers and pillars to be a tool for you, and as well as Black film and any resources that we can provide online. So with that, I'll segment back to you, Alexandria. I see things coming in. So as questions come in, we'll do our best to definitely answer them.
Yeah, I was just looking for the mic because you dropped it and I don't know where it went. I'm like, I'm just, that's why I turned my computer off. I was like, you know what? He doesn't even need me. I'm out of here. I'm gone. You just dropped the mic on the first day in the year of our Lord 2022 of Black History Month. It's done. We done. We just got to shut it down. Everybody go home. Everybody go home.
No, man.
So real quick, because I just, we have to hype each other up, right? And so let me just say that it's true. I'm hyping you up, but it's also true. I really appreciate sitting here and learning, right? It's giving me a lot of, reminding me of things. And I just wanted to point out that a lot of the concepts, Emil, that you taught us today are things that you learn in finance class, right? So, I mean, last week you didn't call it that, but we got an econ lesson, right? To show like how to be a more powerful consumer and how folks can have, if they really have an understanding of economics and the economy, that is what makes you, dangerous, right? In a good way, right? Because you can begin not necessarily to predict the market, but use the information that's out there to make better financial decisions for you and your family. So just really, just wanted to call that out. And I also want to say that this is really next level, right? And I just want to recap the lingo. So we talked about, return on investment, beta, PE ratio, dividends, bid and ask, spreads. I told y'all he was that dude, right? And so he gave you all the lingo. And just one other thing too, I feel like I just want to reiterate that you were exactly right. It can be overwhelming, right? Because it's a lot of information, but just settle down, right? It's financial education and wealth building is a journey, right? The things that the barriers and things that keep Black folks, people of color from building wealth just didn't start yesterday, right? And so it is going to take time because you got to do a little bit of work, right? Get over that, understand and address the financial trauma, right? Start to set goals for yourself, educate yourself. And so that's the journey. So being overwhelmed is okay, but to put a positive spin on it, I think that uncomfortable, uncomfortable feeling could be the catalyst for you to do something differently, right? Today
Right.
is today is the first day of your financial life, right? And just the last thing, and I love a pair to rock, a pair to stock, and a pair of stocks, right? Because sometimes we have a habit of wearing our wealth, and that's where it ends. So just thank you. And I'm done hyping you up. I'm just super excited. And again, Jasmine, if you could put it in the chat. So for the folks that missed session 1, moving from fear to financial anxiety. Addressing financial anxiety, building wealth in the age of COVID. And today's session is impact investing. And so, yes, there are some comments in the chat. The chat's blowing up.
Yeah. Thank you. And I just want to really harp on that feeling of being uncomfortable or feeling of being overwhelmed, right? Like, one, it's normal. It's natural, right? Like if this is something that is new, that's okay. You should have feelings of, oh, I didn't know what I didn't know, right? Like, and that can be overwhelming. And so it's like, what do you do about that? What is the next step? And this is a space, right? Like for those who publicly said that, right? Like that's empowering to even release that, to say, this is something that I am not familiar with. And that's been intentional also for so long, to keep us in that space, to make sure that we don't have that information available to us. And so it is okay. There is no shame there. There's nothing wrong with it. Now we build up on it, right? Like now we look at it and see, how can I take some of the small tools, right? Like I don't expect anybody to, have all of the lingo, but in the Google Drive, right? Like you'll have the access to all of this terminology so that it can be a part of. And so when you're looking at things, they begin to make sense when people are saying things to you, right? Like, or when you're reading or seeing something online. And that's where that power comes in, where you have that aha moment and you can actually revert back to something. And so again, it is okay to be uncomfortable, to have the anxiety, but you are now in full control, if you weren't before, of how you want to be a part of your financial journey, right? Like, and it's yours, and it's not compared to anybody else, right? Like it is just your particular journey and what is going to make sense for you and your family.
Yes, and we got a question here. Will you email us the resources and a recap so we can utilize the information? Again, in the chat, there is a link to the Google Drive where you can catch all the PowerPoint slides and the recording. Also, at the end of today's session, or by the end of today, everyone will receive a link to Best Money Moves, which is an online platform that it's free for you all, for our participants, and you can go and do a financial stress test to understand what are the things that are, giving you pause around your money, so you can begin to address it. There are also informational videos and resources all the way from home buying to credit repair, and to investing. And so again, like you said, this is a layered approach, right? It's not just one thing, it's a continual process. So be on the lookout for that. Best Money Moves, go on and activate that account. Also, another resource that YWCA has is our Respect card. It has a new tool, the debit card, that allows you to manage your money. A lot of folks are still using are still using check cashing places, right? And we know that that is not a way to build wealth, because they charge you so much, like fees and all and things like that. And so the Respect card provides you an option to have an online bank account, and it does things like reporting your rent payments in order to build your credit. So check out the Respect card. I know that link is going into the chat. And so again, we've got so many resources for you. Again, don't forget about Best Money Moves and the Respect card. Watch the replay, look at the slides, and I would say, Emil, people probably need to review these things more than once, right? Because the first time you kind of see it, but by the second and third time, you can begin to really absorb, what you're learning and put it into practice.
Right. And I'll make this commitment that, we're definitely going to do something again with the YWCA. Hopefully we'll be able to do something in person. But when it warms up, it's too cold in Chicago right now.
You know what? Don't do like that. We have coats. We'll get you a coat. A puffy coat.
No,
and just real quick, also another resource that I didn't mention is the World of Money app, right? Another amazing program that YWCA Metropolitan Chicago has is a program, World of Money, and it's for youth ages 7 to 18 that teaches them how to be young moguls. So kids learn about investing, they learn about saving and earning an income. Again, it's called World of Money. So listen, we got everything, right? We have everything for you to build wealth. And then the last thing I want to say is the YWCA has amazing organizations that we partner with. We also have financial coaches or housing counselors whose job it is to sit with you, work beside you to help you figure out your financial goals. So for those of you who are like, oh my God, I'm overwhelmed, but I'm ready, you should reach out to one of our HUD certified housing counselors. We are helping folks purchase a home, find affordable rentals, and get their budget together, right? So that you can begin to invest and utilize all the information that Emil has shared with you. So we're just super happy to have everybody here with us. And then, Emil, did I miss anything?
No, you hit it all.
Yes. All righty. Well, thank you all today. Again, look out for those emails. And I just want to give a special thank you to Black Femme. This has been a really amazing partnership. And I hope that you all really, 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 really share this information with your mama and them, your cousin, your colleagues. Emil has dropped the mic, and I feel like we just had church today. We should just pass the collection plate.
A mess. Well, again, thank you. Thank you to Jasmine, who has not been on camera, but has definitely facilitated and helped to put all of this together. So our team, we're happy for this partnership and look forward to the growing partnership, as this is not going to be a one-time thing.
Right. Oh, and the book. Tell them about the book. I almost forgot. How could we forget about the book?
Yeah. And so Jasmine, I believe the link for the book will be in there. If not, we can figure out a way for all of the email addresses and send a link to them for the book. So everyone will be able to get a free copy of Chloe's book.
Yes. Well, thank you all so much for joining us. Be well, be safe, wear your mask, and let's get this money.
Yes.
All right. Thank you, everyone.
Thank you all.